Hi everyone, hope you had a good week and a good start to the weekend here. This is Rob with Velocity Portfolio. This video is going to be another weekly update. This is the 17th week update since I started fully living out of this brokerage account. As you can see on the screen here for new viewers, real quickly, what we're doing with this channel and this account. All of my earned income goes into this brokerage account, no longer goes into a checking account. It's invested into these three categories: high yield, dividend growth, and growth. And then throughout the month, dividends that are received from these various holdings pay down my margin balance because I pay all of my expenses with margin. So when a bill comes in, I withdraw it from the account. It's on margin, so it's borrowed from my assets, and then I pay that bill. And throughout the month, as dividends roll in, which I'll go over here shortly, those pay down the margin balance. And it's just kind of a circular motion for a while until eventually the dividends that the account is generating will exceed my monthly expenses. So that's the goal of the channel here. This particular update, these updates documents that. And then I do on Tuesdays a little bit deeper dive into strategies and things like that behind the actual strategy and some mindset things and stuff like that go into it. So diving into the portfolio as I typically do, let's check out where the account is sitting. So right now we're looking at 150,356 gross account value, and then the net account value is at 120,872. This is skewed because I made a deposit today, but it's saying up 2.76%. That's not totally accurate. And then my margin balance is sitting at about $29,483. It's been kind of sitting in that range for a little while now, for a couple of weeks at least, and we'll see it in a different setting here. You can see my margin balance again here. You can see the amount that I owe so far this month on it. My equity percentage is sitting at 80%. I've been floating right around that 80% mark for the last 2 or 3 weeks now. And then my margin rate is 8.75%. I negotiated this down a few months ago when my account was actually still under $100,000. I've now hit 150 in gross account value, so I'm probably going to get a hold of them again and see about lowering it even lower than it is now. So to be determined on that, and I'll keep you guys updated on what happens with that. Going over to Snowball Analytics, what I use to track most of my stuff. Again, the gross account value is listed here. You can see my total profit. This includes dividends and everything that's received, and then my internal rate of return, and then my percentage for distribution / dividends, and then my allocations and target allocations. So I'm sitting at 26, goal of 30, goal of 25, sitting at 23 for growth, high yield, the giving fund, which doesn't have a goal, but just want to grow it as big and as quickly as possible. And then super high yield funds is very high as I'm scaling into these other positions and doing less into here. Going down here and looking at dividends so far, so you can see here what I've received so far in January. It's projecting that I'm going to get $3,102.95. I've already been paid $2,688.43, another $3.99 declared, and another estimated $410.54. You can see here what I've been paid out so far on some of my holdings. And then going over to dividends received again. Some of these are not really relevant because I didn't start living out of this brokerage account until October of this last year. So this is really when it started. So you can see 2000 in October, 2000 almost identical in November, jumped up a bit in December, and now here we are in January. So we're projected to exceed December, which was last month, obviously. So that's always good. So the goal is that these are going to go up, slowly, but are going to rise over time. And this is trailing 12 months. Another view of this, you can see dividend growth. Again, January of last year, I was not running the strategy yet. So these aren't going to be totally accurate until we get to October here. And then you'll start to see each year stack up and how they're stacking against each other. So I'm excited to see what this is going to look like in the next couple of years. But wanted to show that. And then my goal, this says 8 years right now is when I'd achieve it. This is skewed right now because of some of the higher payouts and how it kind of messed with the portfolio. So this will level out, but it typically says 5 to 6 years is when I would achieve my goal, which is, and actually I'm seeing this now, this That's why it's off. It actually adjusted this for me. I don't know why. This is supposed to be 144,000 annually is what I'm looking for in dividends. So that's why this is off. I'll have to go and adjust that, but just notice that right now. And then just looking real quick at today's top gainers percentage-wise and losers in my portfolio. You can see top Microsoft, Amazon, Starbucks, Meta, Nvidia, ASTS, which was big. It fluctuates a lot. It was up big a couple days ago. Rivian, RDTE, SoFi, and Google. And if you look at dollar-wise, Starbucks was my biggest gainer, followed by the others, and then similar over here. Going into my diversification, so you guys can see XDTE, Starbucks, and Pepsi continue to come down as I invest in other things. So trying to get all these holdings around 5% roughly. Microsoft is coming down now as well. It was a bit higher up there. WPay, which I put way too much in up front, is starting to come down here. And so all these are getting a little closer to the allocation percentage that I'm shooting for. Obviously I have like 32 holdings, so it's not going to be 5% exactly, but I want to hover in that range and not have too much in one position. I'm a little heavy on XDTE, and that's because in the beginning of last year, before even starting this strategy, I went real heavy into it. I have 500 shares of it. And instead of selling to rebalance, which I don't want to do, I'd rather just make more purchases in the lower yield or the lower allocation percentages to even it out that way, since I'm making weekly deposits, obviously, of all my income. So I've mentioned before, I get paid on Friday and my wife gets paid on alternating Fridays. So we literally get a paycheck every single Friday of the year, which is really nice. It makes it really, really nice for dollar cost averaging. Unless it was like this week where everything dropped on Tuesday and then by Friday it was basically back to where it started at the beginning of the week. So by the time my money hit and I made purchases, everything was kind of back to where it was. But I was able to find a couple of positions in my portfolio that I was down on and dollar cost averaged into those, which I will jump into right now. You can see what I purchased today with the income that I deposited. Just 2 holdings. 36 shares of RDTE and 36 shares of QDTE. You can see how much went into them. At the time, I was down, I think about 7% on QDTE and 3 or 4% on RDTE, or I might have that flipped. And I'll go show a different view of this now, so you guys can see those two are in my high yield allocation, or category, I should say. So looking at RDTE, I'm up 2.49%. I bought another 36 shares. I was at 50 before, so now let's see where I'm sitting at on it right now. So I've received $122 in dividends. Keep in mind this is all since October, or when I purchased it. So total profit, I'm up 2.5%. Capital gains, just capital gains wise, I'm down 2. So when you factor the dividends back in, I'm up 2.5%. I was able to lower my cost basis on this. RDTE, which is connected to IWM, has just been on a tear lately. And I'll show that here in a second as well, but wanted to show that. And then let me show QDTE, which I added 36 shares of as well, and how I'm doing on that now. You can see I'm now profit 1%, capital gains down 5.1. So factoring the dividends in, I'm up, or the distributions in, I'm up. And I was able to lower my cost basis on this as well today. So, and as I just previously showed, allocation wise or diversification wise, this is after adding them. You can see QDTE is still at 2.73, so it was lower than that before I bought more of it today. And QDTE is where, no, sorry, not QDTE, RDTE. Where is it at? There it is. 1.74%. So it was pretty low before buying more today, and it's still pretty low. So I'll continue to add to these positions as it makes sense, as the percentage of allocation, and then how much I'm down on them on. I kind of look at it every time I deposit money and go from there. So going over to, I wanted to show performance-wise how the portfolio is doing. So Velocity portfolio, I started this October 1st of 2025 and running through end of day yesterday. You can see I'm actually down 0.88% compared to, you can see the other, I know my face is right here blocking some of these things. Let me move this up a little bit more. So you can see Russell has just been killing it, the Russell 2000, which is IWM as well, S&P and NASDAQ. So, you know, since I started this strategy, and I did move a lot of things around in the beginning and was selling some things and reallocating and all kinds of stuff just to get this kind of set up. That's kind of the reason why it's down a lot. Plus, this strategy just takes a little bit of time. Depends on when you get in, when you purchase certain holdings, things like that. It just so happened that I was already holding Misty and Ulti and some of those super high yield funds. And then when I started this strategy, they just took a nosedive almost seemingly the next day, which really hurt my performance, going back to that time. But still only being, about 4% behind S&P and NASDAQ. I think is pretty good. More importantly, you can see what I've contributed since then, and you can see what I've withdrawn since then. So my net contribution is here. Since I'm living out of this account and paying my expenses with it, this number needs to stay higher than this, obviously. You don't want to be pulling out more than you're putting in, because obviously you're going to go upside down on margin faster, and that's not good. So that paints one picture, but I wanted to show, now that we're like 3 weeks into this trading year and this year in general, I wanted to show the year-to-date numbers, which paint a little better picture. So looking at January 1st through end of day yesterday, you can see I'm actually beating everything except the Russell. Russell, like I said, has just been on a tear. So I'm at 3.32%, S&P at 1, NASDAQ at 0.85, and the Dow is at 2.81. And again, you can see my contribution so far this year, 9,000, and withdrawn 1,173. This number is pretty low. So because I pay a lot of expenses with credit cards, there's kind of a 30-day float in there because they sit on the credit cards, and then I pay them off on the next statement balance before any interest hits. So I don't pay any interest on the credit cards, but it kind of allows me to float 30 days of expenses, which is great. So February, when I have to make a lot of payments on credit cards and things like that, it's going to be all the purchases I made for Christmas in December, which was quite high. A lot of gifts and things like that. Gave away some money, donated some money, all of that. So that money is going to hit in February. So the margin balance, I think, is going to drop a little bit, and this withdrawal number is going to go up quite substantially. So probably in 3 or 4 weeks, we'll kind of see some of that taking place and how it affects the portfolio. I don't expect it to be anything drastic, but and I'm still making contributions every week, obviously, so it should balance out pretty well. And we'll see. I'll keep updating on how I'm doing performance-wise year to date, and then also since I started. And as I get deeper into this, I'll be able to look at 3 month, 1 year, and then eventually we'll get to the end of the year, right? So far, I'm pretty happy with where it's going, and everything that's going with the market right now. It's, the market's still rising slowly, but it's kind of starting to trade sideways a little bit, which I think is actually good for some of these high yield funds and the way that they trade. And eventually it's going to take off again, I think. But we'll see what happens. I did a video this past Tuesday on kind of what I do with, or what my plan is for my portfolio if we start having big market drops like 10, 20, 30%. So check that out if you want to see that. And then I'll have another video, of course, on this coming Tuesday, some sort of mindset deep dive or strategy deep dive. Haven't decided yet what I'm going to do. If you guys have any suggestions for what you'd like to see or hear me talk about in regards to mindset or strategy, this strategy or my portfolio, let me know. I'm happy to take a look at them. Otherwise, I will see you guys on the next video. Thank you for watching. Everybody have a great weekend.